Hi, everyone. My name is Rajeev Chand. I am at Wing Venture Capital. It's my distinct honor to moderate this fireside chat. For this session, we are joined by the Chief Data and Analytics Officer of the largest bank in the United States, also the sixth largest bank in the world. Her program and Chase's overall AI program is one of the most envied programs, not only on Wall Street, but across Fortune 500 corporations. Everybody, please join me in welcoming Sandra Nudelman to Transform. Sandra, welcome.
Thank you for having me.
So, oh no, a real honor, a real honor. So, Sandra, let's start with kind of the first question, which is the major applications that JP Morgan Chase has done with AI. And I hear across many corporations, a real challenge in getting AI, from pilots to deployments. Where have been the two or three highest value applications of AI for JP Morgan Chase?
Yeah, I think of it as three big areas that we try to focus. The first that we focused on was clearly fraud, because that's something that no one wants. Our customers don't want, but we don't want in our bottom line. And so going after and identifying fraud proactively to prevent it is something that we put a lot of effort in up front and did really well at. The second application that we got off the ground a couple years ago was actually marketing personalization. And that's also been a very lucrative thing for us. It's something that folks like Amazon, Netflix clearly pioneered, but even banks need to do marketing. So our ability to personalize that messaging to our customers is critical. The last and the newest is really about using machine learning or artificial intelligence in the operations space to drive automation of processes or improve precision in processes. And that's something that we've just started out in the last, say, 12 months, but is also really taking off.
On the fraud, let's take each one of those in turn. So on the fraud, can you talk a little bit about that? So has fraud been materially reduced by virtue of the machine learning applications?
Absolutely. I think we've been public about the fact that we've been able to decrease fraud well over $100 million a year using these efforts.
That's amazing. On marketing, on your second application, oh yeah, no, that's truly amazing. On the second application, I saw a great quote by your CMO. She said that machine learning is the path to greater humanity in marketing. And so, talk a little about kind of your marketing applications.
Yeah, I think it's a really astute point that came from Kristen Lemko. Because when you think about it, what we really try to do in marketing is to connect with the customer. And in the past, the way we did that is we had someone who was known as a creative come up with the content that we thought would resonate best. We'd take a bet and we'd get it out the door. Now what we try to do is we build systems that are agile and take multiple different feeds and we experiment. And we enable the machine to look at how things and how customers are responding to that creative and to pick the winner itself. And so we actually are able to get in touch with those customers in an even more relevant way because they're helping us through machine learning get to what works for them.
So let's say that I'm a Chase deposit customer, or a Chase credit card customer, or maybe an auto or home mortgage customer.
Hopefully
How
all of them.
customized? Yeah, or all of them. That's right. How customized can the messages get, and at what point do the messages get into creepy rather than personalized?
Yeah, the point isn't necessarily to get to something that is so personalized that it's creepy. And we're still building out the inventory of messages that we personalize. So I don't think we're at the point yet where customers will look at us and say, this seems a little bit odd. But we built out enough messages that when we think about everything from engaging a customer in the product they already have, so if you save and we think you could be saving a little bit more based on the spending patterns that we see in your account, we might put an advertisement up that says you could be saving $70 a month more, click here to auto save that amount. And so we're trying to get it in such a way that even when it does feel very personalized, like in that instance, that number, $70, might be personalized and distinct to you. It's something that benefits the customer.
And can you talk a little bit about the metrics, sort of how, what have been some of the results in terms of the marketing improvement?
I think we've seen something like a 4 or 5x increase in engagement in our advertising, depending on the different types of techniques that we've been using to personalize. And again, we're personalizing at many different levels. So I think what you heard, Kristen also was very public about the work we've done with Persado. That is
Hmm.
actually personalizing some of the text that we use in terms of the content. We also have these personalized insights, like what I mentioned before. Many of you, if you can go on your mobile app, you see something we call our snapshot. There's these little tiles with personalized insights that, again, are the numbers are unique to that customer based on their financial health and what their financial relationship is with us. But we're also personalizing at the highest level. So which advertisements, which tiles, not just the content within the tiles themselves, but all of them have increased engagement multifold.
That's awesome. And then on kind of the third application, in terms of kind of process automation, one of the things that you and I were talking about earlier was the application of machine learning for the PPP program. Could you talk a little bit about that?
Yeah, and it's something, ultimately we need to think about machine learning and AI as something that helps people. And so, as we were in the throes of the PPP process, which many of you have heard about, it was just a lot of stuff coming at us all at once, and a lot coming at our poor business banking underwriters all at once. And they needed a way to understand what documents our customers were uploading, which we hadn't yet tagged every single document as part of our workflow. So instead, after the fact, we worked with the people building the process in technology to use natural language processing to ensure that documents that had been uploaded were tagged appropriately, which helps speed then the underwriter's ability to process those applications, getting customers their loans faster.
Yeah, Sandra, I remember seeing stats, something like 75 years worth of applications into the SBA in 2 months. So it was like multiple orders of magnitude. How were you able to build the machine learning models for that sort of document sort of classifier so quickly? And could you talk a little bit about kind of the process by which you did that?
Yeah, the great news is we didn't really have to build anything new. So the document
Mm,
classifier existed as part of our operations machine learning platform. And so it's something that we had
mm,
used in other ways. So this was about actually just retraining and tuning it for a new set of documents and a new purpose, which happened, I think, over the course of a weekend. The team that runs that
mm.
program is pretty incredible, and everyone, it was a bit of an all hands on deck for PPP, and that team certainly helped.
A couple of other areas. Has machine learning at Chase been useful in credit worthiness scoring and in credit decisions?
That's a really interesting point that you bring up. It's something that we are just starting to look at, and we are experimenting our way in extremely closely, or very carefully, I should say. As you know, credit is something that is a regulated product. We want to be very, very careful that anything we do in this space is fair to all of our customers, and that we actually understand what the models are doing as we work towards them. So we're inching our way in. We're focusing on things that are a little less risky. For example, things like proactive credit line increases are a place that regulators think we can play a little
Mm.
bit more easily into, as opposed to things that might be derogatory decisions for customers, which is not certainly where we're going to start. So we're learning. We're going in. I'd say, though, that given the current economic focus and downturn, we're probably focusing a little bit more on the first three initiatives, and we're probably going to put credit a little bit further afield for the next couple months.
If you were to put sort of like a 5-year kind of mindset, do you think that an AI credit officer is possible?
That's a really interesting question. Absolutely, because if you think about it, even today, many credit decisions are automated in some way in a bank, right? Especially the ones that are very easy. So I don't see this as something that is brand new to banking. I think it is something that just we're using new tools and technologies that are less explainable. And as we get better at being able to explain what the technology is doing and be able to pass the straight face test with ourselves, with our customers, with regulators about what that is, it will, of course, continue down that path.
And then two other applications that I saw, I think your CIO talk about in an article maybe a month or two ago was kind of what's next for AI on kind of a near-term basis. And she mentioned kind of helping people retire, save for retirement, and then also helping more people get access to financial services. Wondering if you could talk a little bit more about how kind of Chase could apply machine learning for those two goals.
Yeah, those are a little bit what I was mentioning earlier about how we're
Mm,
using data and machine learning to personalize specific tiles. We internally call those and talk about those things as nudges or insights. So, to the extent that we are looking at people and saying, hey, people like you tend to save a lot more, and trying to prompt them to save more, for instance, we think those are things that are very, very helpful for the customer. Or if we see things like a repeat
mm,
purchase that may have been unintended, calling them out and having their back on that, that's the sort of thing that we're trying to do.
And then on the financial inclusion, how would that sort of kind of give me an example of how that would perhaps manifest itself?
Yeah, so for financial inclusion, what we've been starting off on the last, I'd say probably 6 months, is really trying to figure out how we get to a better way of doing fair lending testing, because fair lending is something we care deeply about. But as we continue to scale our efforts in machine learning and AI, it's hard for that team to scale up its own ability to confirm that what we're doing is fair. So we've been working with that team to help them use machine learning, I should say, to innovate, to be able to test us at greater scale with more precision, which we think will both enable us to move faster through approval processes, but also confirm at an even broader scale that we are being fair in the ways that we use machine learning.
Sandra, that's awesome. Now, let's turn to maybe impediments. And so I mentioned earlier that you're one of the most envied kind of programs in machine learning across Fortune 500 companies. And that's something that actually I mean with intent. It's something that's shown up in my research. If even from your sort of perspective, what would you say is the most significant impediment for machine learning models at Chase?
I think the biggest impediment at the moment, as I've taken the time to really think about this, is the underlying data. And this is no different than most other programs in large institutions that have a legacy attached to them. It's never the actual modelers, it's never actually the platforms. The tooling is simple. It's actually about the quality of the underlying data. And in a bank of this scale, where I think we generate or we pull in something like 8 terabytes of data per day into our platform, that's a lot of data. And that comes from, several thousand upstream applications, many of which are legacy, not all of which have consistent taxonomies that we're still working to streamline, rationalize, and ensure are registered to make sure that everything that flows into our backend systems is clean and easy. So I still think that many of the folks on my team who build models still spend too much time hunting for data, validating the right data to ensure that they're using the right things.
And I'll have to tell you, 9 out of 10 chief data officers or scientists I've talked to recently have complained, about their kind of data platform. You guys have a new data platform called I think it was called Open AI, if I recall correctly. I might have the name
Omni
incorrect
AI.
there.
Yeah,
Apologies.
Omni AI
Omni
is, yeah.
AI. Yeah.
Omni AI is our new machine learning and AI platform, which makes it that much easier to pipe data in and to build models scalably on top of it. It doesn't necessarily solve the upfront problem of making sure all the data that
Mm,
pulls into it is clean. So it's a great opportunity. Apoorv Saxena is the person who runs Omni AI. I actually spoke to him yesterday about this exact issue and some of the things that we're going to collaborate on to make sure we get some of the upstream data a bit cleaner. We've got a
okay,
lot of
that's
data.
awesome. Yeah, no, I think I saw somewhere 390 petabytes, if I recall correctly, out of one of the articles that I saw. So, Sandra, on this next section, I'm going to do a lightning round. Okay, so we're going to go through, let's just go through a lot of topics quickly. There, I think, is your friendly Ellie puppy, if I recall correctly, coming into the screenshot. And
Exactly.
so, hello,
Yeah.
everybody Transform, say hello to Ellie. Ellie, say hi to Transform. And so, Sandra, ready? So, lightning round, true or false, and then 10 seconds why on each one of these 5 or 6 statements. Uh, True or false, lightning round. Ready?
Hmm.
Software
Yes.
development at JP Morgan Chase is AI first.
False. And the reason is
Ten,
that software development should be business objective first always.
I like it. Explainability is a requirement for ML adoption by business unit leaders.
False. It's required in some cases, but not others. A really great example is that in the paid media space, you actually have to go into automated bidding. And we don't actually know how our automated bidder works all the time, and we don't need to.
Awesome. Synthetic data should be as useful as real data for model training.
It's an interesting way to phrase the question. I think I'm going to have to say false because ultimately, again,
Mm.
for a bank of our scale, there's always many different outliers that even when we do significant testing of data, when we actually get into production, we see that there are issues. And so it's actually much more critical for us to know off of synthetic data with actual real production data whether things are going to work.
Bias can be effectively removed from ML models for lending.
True.
All companies, not just big tech companies, should pause on facial recognition based applications.
False. Because if the big
Mm.
companies don't try to do it, other folks will actually just get in the game and they will be far less respectful of privacy. And that is what we need. We need companies that can be held to account for how they're used.
And last one, Star Trek Enterprise is your COVID streaming series of choice, and it is underrated as a series.
Absolutely, it is so underrated. I had heard such bad things about the series because I watched all of the other Star Treks and I got desperate. And then I watched it and I thought it was amazing. It really fills in the blanks of what happened between the time that Zefram Cochrane actually invented the warp drive and then when you see not just Captain Kirk but really Jean-Luc Picard run the Enterprise. What happened in the middle was messy, and it was kind of nice to see that things weren't as perfect as Jean-Luc Picard seemed to make it out to be up in the next generation.
I'll have to tell you, I signed up and watched Picard, the series, and I was disappointed. So I am excited to get back and retry Enterprise here. That's a good. That might be my takeaway, Sandra, personally from this session. And then I'm going to end here with kind of two topics. The first topic is regarding kind of the coronavirus kind of behavior change, and there was an interesting article in MI Tech Review last month talking about how models got messed up, that they weren't robust enough to handle the abrupt sort of consumer behavior change. So can you talk a little bit about kind of the models at Chase and whether or not they were messed up and whether or not human in the loop retraining was required for kind of the adjustments?
Yeah, so what I'd say is that yes, we've seen a discontinuous change on a bunch of metrics when we look inside Chase, whether that's spending patterns or behavioral patterns in terms of channel interactions. But the question to retrain a model is one of whether we think that discontinuous change is going to persist, right? We don't just go and retrain a model for an outlier event. And I don't think many of us know exactly whether these events were truly outliers, which we should just sort of move past and move forward from, or these were things that will truly create a step change in what the models are trying to predict. So for the intervening period, a lot of what we did, instead of building new models for what may be a minute period of time, is we built strategies, overlays, reports to help us understand the dynamics of what's been happening to our customers, to make sure we were abreast and make good decisions. Because again, not all good business decisions require a model to make. And as we move through this and we see whether it was truly a big persistent change, we'll decide whether a retraining is needed or not.
Got it. And then, Sandra, last topic on my side is obviously the last couple of weeks and months has seen an extraordinary, broad kind of awakening, kind of initially with George Floyd's murder and then more broadly with Black Lives Matter. And I want to kind of bring this to the data science community and the data officer community. What has the last few weeks and months meant to you as chief data analytics officer, and what do you think it means to the data industry?
I mean, it's been a wake up call for everyone, and it shouldn't have been a wake up call this long in the making. I think a lot of voices out there have now been heard that, the Black community has undergone a lot, that there has not been racial justice on all fronts for some time. And it forces all of us to have a reckoning of what we can do more proactively as we look at our own jobs and our own industries. And so, as I think about my current role between data and analytics, the best thing I can do is make sure that how we use data is objectively fair when it comes to not just race, by the way, but all of the different types of minority or underserved groups that are out there. And that's a little bit why we had started, even before all this happened, some of the work that we're doing on fair lending innovation. Because if we can empower the teams that are looking out for our customers, I actually think that's a good thing. I have no problem being in a company that is regulated and also having what we call lines of defense, controls partners, legal partners, compliance partners, audit partners. When they are more empowered, the more they know, the more they hold us to account and hold us to a higher bar, the better off our customers are and the better off I think we are as a society.
Well, Sandra, that is well said. And so, with that, on behalf of VentureBeat Transform, many thanks to you for this great fireside chat. Thanks, Sandra.
Thank you so much, Rajeev.